You know, I talk about investing a lot these days because it's become an obsession of mine. And one of the things I hear a lot when I'm talking to friends and coworkers and family about why they're not investing is that they don't have enough money to do it. Not now, maybe when my divorce is settled. Not now, maybe my New Year's resolution. Not now, maybe when I win something from scratchoffs, which is a terrible waste of money. This is usually what I hear from most people, and it's completely understandable because until a couple years ago, if you wanted to get involved into the stock market and investing, it required you to have like a whole bunch of money and you had to pay for each trade and things like that. But stuff is way simpler now, way cheaper now, and you don't need to have thousands of dollars in order to invest. In fact, if you only have like $100, you can even have less than that. But if you, let's say $100 and you want to start investing, you can do that right now with $100. There is an old saying, or maybe it's a new saying that goes, the best time to invest is yesterday, and the second best time to invest is right now. What I'm going to talk about today is how you can actually do that with $100. There are many different ways in which you can do that, and by the end of this video, you should understand how you can take $100 and have a diverse portfolio without it costing you an arm and a leg. Before I get into that explanation, of course, this being YouTube, you can help out the channel and help out this video and have other people who might be interested in this topic discover it by hitting the subscribe button, the like button, and a notification bell. This tells YouTube that this is a video that is of quality and it should share it to other people, and other people can go, yes, I know now how to take $100 and invest in the stock market and not lose an arm and a leg. You know, because it's kind of the whole point of me doing these videos. One of the first things you want to do when you're ready to start investing and you have your $100 is you got to find an app. You got to find a brokerage to be able to do this with. Now, many people today, after what happened earlier in this year, are quite familiar with Robinhood. Robinhood is one of the apps. Some people prefer that you try to do it. Some people don't. But you can use Robinhood based on your ethics and how you feel about the company. In fact, if you want to get a free stock from Robinhood, you can use a link, an affiliate link down below to be able to sign up with Robinhood. You can also use something like Webull, which I also use. You can also get 2 free stocks from Webull if you use the link down below. And if you deposit $100 in that Webull account, you will get 2 free stocks. Now, Webull is a little bit more of a complicated interface to use than, say, Robinhood, but it is a solid one that a lot of people use. M1 Finance is a very good one in particular for this topic, because what M1 Finance does is you tell it what stocks that you want to have in your portfolio, and whatever money you put into it, it'll split it up amongst all of those stocks. So that's a very good one, especially for this kind of application where you want to take $100 and be able to spread it out and diversify your account. Cash App, strangely enough, is also a pretty good app to use, and most people have Cash App anyway, but you can use Cash App to be able to invest in stocks, and in particular with Cash App and with Robinhood, you can do something called fractional shares, which definitely lets you be able to invest in stocks individually without having to go through a whole bunch of rigmarole and having to buy full shares. You can spend $1 or $2 on each stock and get a big portfolio by doing it that way. So at this point, I guess I should explain what fractional shares are. So usually, most of you know, if you want to buy a stock, you buy a stock. So if, you know, like Amazon right now is like ridiculously like over $3,000 to buy the stock. You know, Tesla is at, you know, hundreds of dollars to buy the stock. And you're probably saying, well, I can't buy those stocks because I don't have $3,000 to buy Amazon. I don't have $600. Maybe I don't even want to spend $20 on, you know, something smaller like that. How do I spread out my $100 if most stocks cost 10, 20 and upwards in order to buy one share? Well, fractional shares, which again, some apps have, a lot of them do, some of them don't. Fractional shares allows you to buy a fraction of that stock. So say you could buy Amazon stock now for $1 literally. You could literally go now and spend $1 and get a share of Amazon if you really wanted to. But that's a big advantage. You can do it in Cash App as well. And what you can do with that is you can buy a whole bunch of different stocks and diversify your portfolio and have a lot of your fingers in a lot of different pies. And what that allows you to do also, especially if you're going to invest in dividend stocks, is potentially get paid every single month from some of these stocks that you own. Now, there's a difference between dividend and growth stocks. Now, most of what I'm going to suggest here are going to be dividend stocks because I'm mostly a dividend investor, but you also want to have growth stocks in your portfolio. You don't want to just chase after high dividends because your return's probably not going to be as good as if you invest in something like an Amazon or like a Microsoft or like an Apple or like a Tesla, which they're not going to give you back a lot of money in dividends, but the growth of the stock and the value that which you purchase it at will increase a lot more typically than it would with dividend stocks. And the question is, why is that? Well, some of these companies, like tech companies, they're not going to be paying out a lot of dividends. Some of them don't pay dividends at all. Like Tesla doesn't pay a dividend at all. And the reason for that is that they want to reinvest a lot of that money into R&D, into continuing to develop the product or create new products or enhance things or improve things. Whereas other companies like Coca-Cola, they're not going to do anything new with Coca-Cola. They don't really need to reinvest in Coca-Cola. So what they wind up doing is they have all this money and they just need to get rid of it at the end of the year. So they have these dividends and they say, okay, this is the money we made this year. We have all of this millions and millions of dollars. We're going to pay it to our shareholders so we don't get stuck holding the bag on this thing. And that's really the reason why a lot of dividends go. Now, dividends are not guaranteed. A company can drop its dividend. They can raise it. They can lower it. You do want to see when you go buy stocks what the rate is of the dividend increases. Is the company you're buying having dividend increases, and have they had it consistently over a number of years? You can use a website like dividend.com to be able to do that. It's a fairly simple app. You can also just look on whatever app you're using. I think even Cash App does have some information about dividends on Cash App when you're going to buy these stocks. Now, when you get paid these dividends, they can come in, they usually come quarterly. Most dividends that you get are going to come quarterly. But you can also get dividends that'll pay annually, some semi-annually, which means twice a year. And some dividends, especially if you have something like a REIT, a real estate investment trust, may even pay monthly because they're getting that monthly rent income coming back to them, and then they need to give it back to their investors according to law. You can see my video about real estate investing using REITs by using that little button above my head, or checking out my channel by clicking on the icon below. Now, as for me, I have something like 65 stocks at this point, which I'm also increasing that because I'm getting free stocks every once in a while and selling some and buying new ones. But I can say, just as a suggestion, again, this is not financial advice. I am not a financial advisor, nor am I your financial advisor. So you should always do your own due diligence before making any purchases on the stock market. But I can tell you some of the stocks that I have, that if you had the same stocks, you would get paid a dividend every single month from these stocks. And an important thing too is to have diversity within your stock portfolio, and I'll explain that after we go through the stock. So I have Target, which is a consumer discretionary stock. I have AbbVie, which is a healthcare stock. I've got Starwood Properties, which is a real estate investment trust, which is a REIT. Coca-Cola is a consumer staples company, which means it's a pretty much an ingrained pillar of the American economy. I also have Apple, which is a tech stock, of course. Prospect Capital, which is a financial stock, which I've just recently got, and their dividend is fairly high. So if you're into high dividends, that would be one to look at. General Dynamics is an industrials company. AT&T, of course, is a telecommunications company. AT&T famously does have a pretty high dividend yield. I believe it's like 7% or more. Exelon is a utilities company. Chevron, as you probably know, is an energy company. And Nutrien, NTR, is a materials company. Now, between all of those 12 companies, you will get paid every single month a dividend, and at the same time, you're covered across the 12 sectors that they want you to be, which is suggested that you should be invested in order to have a proper diversification. And the reason that you want to do that is in case the same reason why you want to have more than one stock. In case that company goes down, then you have other companies that are probably doing well. It's the same in the case of diversifying amongst different sectors. So say like last year when COVID hit, you had some problems with banking was not a good sector, financials, because they weren't paying dividends because they weren't making any money. But other things were up, like technology was up. So if one goes up, then another one will be strong, and then you're never going to have your portfolio, unless everything collapses. No, I shouldn't say never. If everything does not collapse in the world, you're always going to have some sectors that are going to be able to be on an upswing while other sectors are on a downswing. And that's the way that you can keep yourself from worrying about too much about losing money. Because a lot of people do that. They're like, oh my God, what if the stock I buy goes out? Or if I have Apple and Microsoft and they all go down? Or if I bought Tesla and then Elon Musk smokes pot or something and decides he just goes crazy and goes to Mars and then I lose all my money. Well, if you're diversified in many different industries, you're not gonna have to worry about that so much. But right there, that is a way in which you can take $100. And again, like I said, if you're using something like M1 Finance, which will spread it out for you, or you want to trust yourself a little bit more and you want to use the Cash App or Robinhood in order to sprinkle that money out by buying fractional shares, you can do that and get started. And once you get started on that, and this is the big thing, especially for people who are not used to investing in the stock market and don't want to put a lot of money into it, when you do something like this with fractional shares and you have a lot of diversification and you see the dividends come in every single month, then you'll start going, oh, okay, so if I put more money into this, then I'll get paid more money the next time the payment comes through. And the more I invest, the more money I get back. And then you start physically seeing it. And the reason that's good is because you can hear, you hear somebody like me say that, but until you actually see it for yourself and you see the money coming in and you know it's, oh, this is real money that I'm actually getting paid every single month from having these stocks, it then becomes real to you. And then you can start going off on your own and you'll understand the value of investing as opposed to doing something like spending $50 a week playing scratch-offs. But that's it. That's how you can take $100 and invest and be diversified right now. If you have any questions, of course, let your voice be heard in the comment box below. And like I said earlier in this video, if you want to get involved in this and you want to start up, I do still have an affiliate link with Robinhood. If you want to use them, you get 1 free stock by just signing up with them. Of course, there is Webull, which you get 2 free stocks if you invest $100 in there, so that'll get you started off right away, and maybe you'll get a dividend stock or one of the ones I mentioned here. And you can sign up for all kinds of different other services like M1 Finance and whatnot. I definitely encourage you to check those links out down below so you can get some free stuff out of that if you're going to start this journey. Until next time, I will see you guys for more news, more videos like this, and anything else you guys want me to cover on this channel right here on Wrestling with Finance.